Today, I wanted to pick a common topic for discussion. Whenever the year ends and it is time to save money for taxes, the most easiest and most common way is an insurance salesman who is roaming around the office. He dumps a policy on you. I use the word dump with great sense of responsibility. Most of us confuse between what life insurance is supposed to do. We mix investment and insurance. Let's take a look. Welcome back to Be Rich. Anybody who is seeing this and is salaried and is a middle class or upper middle class will definitely have a life insurance policy. In my time, the only life insurance policy available was LIC. Today, there is hot competition from a clutch of private sector companies. Please understand that most of the products they sell and where life insurance companies make a lot of their money is in selling traditional policies which mix investment with insurance. If you buy a product like this, you neither get insurance nor you get investment returns. And you feel nice because insurance is mitigation of risk. In case you die, then your family gets to keep the money. In case you survive, you don't get any money. This is pure term policy, and this is the only policy that 99% of us need. People who have hard assets, inherited or earned, and they don't have any liabilities can need not have term insurance because their family is well provided for. But none of us buy these term insurance. Most of us buy what is known as ULIP or endowment or whole life plans. This is completely ridiculous and this is a con game by most insurance agents and insurance companies. The government of India uses life insurance companies as a piggy bank. It raids it whenever it needs to rescue a sick public sector company and carries out favors to crony capitalists. This is irrespective of party. All governments have done this. And whenever they are short of capital to meet fiscal deficit, they will raid LIC. LIC is not even a traditional company. It is a mutual beneficial company. That means LIC technically has no owner. The government is trying to appropriate this ownership and then sell 25% stake. Let us see what happens. But why is life insurance not a profitable investment for you? Understand, the agent who comes and hard sells insurance for you is not doing it free of cost. He is going to make 30% in the first year, and if he is an agent who is performing, can make up to 40%. The balance 60%, a substantial portion goes into writing the insurance, say about 10%. Another 5% goes into administrative expenses. So if you are very lucky, only 55% of your premium is invested in the first year. In the second year, this goes up to 75 to 80% as administration and insurance costs remain same. The agent gets a commission of 5 to 7%. Since the commissions are very generous, people keep on pushing insurance. Since SEBI has made mutual fund sales very strict and even cramped the freedom of mutual funds to invest, most of these distributors are now busy pushing insurance. If you go to a banker, instead of selling you a fixed deposit or selling you a liability, he will desperately try to sell you an insurance. He tries to sell an insurance product to you because he has to meet his commission targets. There is a product called bank insurance. In bank insurance, basically the insurance company uses the bank's networks to sell this product and pays them a hefty commission. So all bank managers have a target to sell insurance. So if you are an NRI or a wealthy individual who's come back to India or gone back to your hometown and you ask for a locker or you go to make a fixed deposit, a public sector manager himself will sell you an insurance policy. If you are looking at new generation private sector banks, all of these guys are busy selling insurance in the name of selling wealth. There is no way a life insurance company can create wealth. Your returns in insurance company is only 4 to 5%. In the average inflation in India over the last several decades is minimum 6 to 7%. After a spell of 4 5 years of very relatively low investment, low inflation, inflation has peaked this year in India and has gone back to its usual rate of 7 to 8%. No life insurance policy can give you 7 to 8% because a large portion of the money you have invested is appropriated for other purposes. Therefore, that it makes no sense for an individual to put in into LIC. Then why do we do this? Because fundamentally we are lazy and we do not want to think about it. You are young, your parents are impressionable, and LIC itself has a wide range of network of insurance agents. Somebody known to your father itself, or one of your uncles will be an LIC agent. He will be waiting for you to pick up your first salary and swoop in to sell this insurance scheme to you. First, it will be talking about the benefits of saving tax. The other benefit, he will say you will get such wonderful returns. Neither of them is true. And if you see through all this, finally they'll be pleading and begging to say that to save my agency, I need 12 policies and therefore please invest. None of these make any sense to you. If you actually look at investing over 25 years, if you had bought a pure term policy where you will not get the money back if you survive, and suppose put up a similar sum in index funds, say the Nifty and the next Nifty or an S&P 500 fund, you would have made far superior returns. This is just sum equal to term, and the suppose you are putting 600 rupees in term every month and a 600 rupees SIP. If you are doing a Jeevan Anand or some policy like that for 4,000 rupees a month, life insurance component is only 10 lakhs. So if you are going to take a term insurance for 25 lakhs and you are below 30, it's going to cost you only 250 rupees or 300 rupees per month. If you invest 300 rupees in a term insurance and 3,700 rupees in the Nifty and next Nifty, compound it at 8%, there are enough calculators there for 20 years, which is the life of a Jeevan Anand policy. You will make mind-boggling money, far greater than the any return that LIC can give you. Any life insurance company, basically a Ponzi scheme. It is because people mix insurance with investment, they get into this trouble. Always make sure don't mix investment with insurance. Insurance as such is a separate product meant for risk mitigation, and you do risk mitigation separately and do investing separately. Thank you for watching Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.